I'm Kieran from CryptoBoost and welcome to this short-term technical analysis video on BTC USD. And we're going to look at what the short-term price prediction is and where I believe that the price is going to, which targets it will reach, and give my reasoning. So hope you enjoy this video and let's get started. So first of all, I'm going to quickly explain what we've got here on the chart. Nothing too complicated. I've got three moving averages. I've got here the 100 EMA, I've got the 50 EMA and the 20 EMA exponential moving average, and I'm looking at the daily chart BTUSD on Coinbase. So we've had a fantastic rally back with the lowest low on the 16th of December 2018, and we had 182% growth over the last few months and reached nearly a $9,000 price tag, so 184% growth. Now, in my opinion, the first target where the statistical probability is pretty high that we'll reach it is the $7,100 range, and that's at the 20 EMA. And the next target, which is a bit more pessimistic, but for the short term it's probably healthy that we have such a correction, is the 100 EMA, and that's at the $6,000 range. It's difficult to state a definite price, so I prefer like having a bit of a spectrum. Now, my reasoning why I believe that in the short term, like the next few weeks, we're going to reach the 100 EMA is because during the last bull run of 2017, which actually started at a very low price in 2015. So if we go back in time and even further, so here this is actually still this is 2015, and then the lows of around $350. Actually, the bull run started around August at around $250 BTC. So we won't go so far back, but things I like to point out. So during the bull run from 2015 to the end of 2017, we had multiple touch points on the 100 EMA. So the price of BTC fell down and touched the exponential moving average, which is the 100 EMA, on multiple occasions, and bounced back up and continued rising. So here we've got one touch point, and then we've got another touch point on the 13th of January 2017 at $756. And as you can see, after the touch point, we've got a continuous bull trend for a few months, and then we've got another touch point again, and we've got multiple touch points during the last bull run, and it's basically a bit of a correction to indicate that the market is breathing a little bit and getting ready for the next bull phase of the market. So here we've got multiple touch points, and after each touch point we've got a healthy growth phase and all the way up. So the last touch point was on the 15th of September, and after that we have this exponential parabolical growth which led up to the $20,000 range. So we won't be looking at that, but I want to point out something else which is very important, and that's after each rise we had a correction, and the correction is actually you can calculate the correction amount pretty accurately. It's not like a definitive way, but with Fibonacci retracement levels, you can get a quite accurate prediction on how much the amount can correct. Now, quick sidestep to what Fibonacci retracement is. I've got here an interesting article which explains it. We won't go into detail, just a quick overview. And in technical analysis, Fibonacci retracement is created by taking two extreme points, usually a major peak and dip on a stock chart and dividing the vertical distance by the key Fibonacci ratio. So you've got 23.6%, 38.2%, 50 and 61.8% and 100%. Once these levels are identified, horizontal lines are drawn and used to identify possible support and resistance levels. So the most important Fibonacci ratio is 61.8% and is found by dividing one number in the series by the number that follows it. For example, 21 divided by 34 is 6.176, and 55 divided by 89 is equal to 0.6179. The reasoning why this works, I won't dive into it, but I think it's important to know that you can use this retracement levels to more or less predict when you could actually start accumulating and where to place your buy orders and so on. So let's go back and continue with our time travel. So let's take this, on the toolbar here, you've got the retracement, Fibonacci retracement, and you can select the low and the next high. And as we can see here, we more or less touched at this price point here during the correction phase, we more or less touched the 0.61 Fibonacci level, and that's at $763. So from the peak at $1,121, we retraced back to the 0.618 level. So that's the first example. Now, if we take the next low, so that would be here at $763 US, and we take the next high, so we're going to take the high of $1,359 US, and then we take the 0.618 level, and here again we actually touched it. We actually went a lot lower, but it's a good indicator, and here it's around the $995 US level. If we take another example here, we've got a much more exponential growth down from the $948 US level to $2,980 US level on the 12th of June 2017. So here again we take the Fibonacci retracement tool and we take this. Let's see if that works. Maybe I have to remove this circle, and we take from the low and pull it up to the high, and we check the different support levels. Again, the 0.618, and we barely manage. It's a bit above it, so it's not perfect, but still, if we would put our buy orders between the 0.5 and a little bit underneath the 0.6, then we would definitely have some orders which are filled, even though this is just the wick. So this would be probably maybe only a few hours that the price dipped below the $2,000 range. So as with this said, I think the probability that we first of all retouch the 100 EMA is pretty high after an exponential growth that we had. So if we take this growth here, which is pretty significant, from $920 US to around the $3,000 US range. So we've got a 225% growth, which is big. It's a lot more than we had now in the last few months. So here we're back at the current time, and if we got here the price level of $3,182 on the 15th of December, and we take the, we've had like 184% growth. Now of course I believe that here this growth has because we broke down through this rising wedge, we are entering a bit more of a correction phase. And now when we take the retracement tool, Fibonacci retracement tool, from this low of $3,200 and pull it to the last high of $9,000 US, we get 0.6 would be a little bit below the 100 EMA. Now, of course, these things are not accurate, but should you be thinking about accumulating, and remember, this is not financial advice, this is just my opinion, I believe that putting buy targets between the 0.5 and 0.6 levels is pretty good for the next few weeks, or probably next 2 months. But it's also still important to make sure if we bounce back up from the $7,100 level and we reach new highs, then we have to do all these calculations again. So basically that was it. So what you should take away from this video, this is not an indication on if you should buy or sell. So definitely do not try and time the market and sell your position and anticipate a correction and try to buy back in lower. In my opinion, for long-term investment, that's much too risky. So my strategy personally is just to try and accumulate and buy the dips. So this will hopefully help you time the market a bit better in buying the dip. And very often the market always tries to find its way back to moving averages, especially since it moved so far away from the 100 and the 50 EMA. So the 50 EMA is definitely a good first indicator to see if we're moving into a bit of a correction. And it's good to look at this in moving average to see if we can hold it or we'll be dipping below. So should we dip below the 50 EMA, then 100 EMA retest is likely. So that was it for today. Hope you liked this video, hope you found it helpful, and I'll catch you on the next one. See you soon. Bye bye.